Hi, everyone. This is America Adapts, the climate change podcast. Hey, Adapters. Welcome back to another exciting episode. In this pod, we're talking about flood risk disclosure, a simple but powerful tool that can help homebuyers avoid financial disaster and make our communities more resilient. As climate change makes flooding worse and federal support for resilience efforts pulls back, some states are stepping up with smart policies to protect people before disaster strikes. One of the best ways we can bake adaptation into modern life is by using the systems we already have, like home buying, to make climate-smart decisions. Flood risk disclosure laws might not sound flashy, but they're a critical tool for keeping people out of harm's way and making sure they don't unknowingly buy in a future flood zone. Some states are leading the way, proving that smart policies can actually help us adapt. For this episode, I've partnered with the Natural Resources Defense Council. Kicking it off will be Joel Scata from NRDC. It's an org that's been a national leader in pushing for stronger flood disclosure laws. We'll also hear from a homeowner who found out the hard way what happens when flood risks aren't disclosed. Plus, we'll highlight some examples of states that have successfully passed these laws and what other states can learn from them. For those working in climate adaptation planning, my listeners, these efforts offer real lessons on how policy changes, sometimes in unexpected places, can help us adapt more quickly to the impacts of climate change. Okay, let's join Joel Scata from NRDC. Hey, Adapters, joining me is Joel Scata. Joel is the senior attorney in the Climate Adaptation Division at the Natural Resources Defense Council. Hi, Joel. Welcome to the podcast.
Hi, Doug. Thanks for having me on.
Joel, first off, just ground my listeners. What is NRDC?
Yeah, sure. NRDC is the Natural Resources Defense Council. We're an international environmental nonprofit that focuses on helping protect and safeguard some of the Earth's best natural resources, as well as protecting human health. And so we do a lot of work on reducing the impacts of climate change through trying to reduce carbon emissions, as well as adapting to those impacts. We do work to remove lead in drinking water, as well as protect natural resources. We're spread across the country, as well as in China and India.
Great. And I know what we're going to be talking about today in this episode, but what else do you do there as senior attorney? What's keeping you busy?
Yeah, a lot's keeping me busy these days. We are doing a lot of work on helping communities prepare for the impacts of flooding. So looking at improving building codes and other local laws and ordinances that can encourage stronger building in the face of worsening climate impacts, especially in regards to flooding. We're doing a lot of work on getting information into people's hands. That's a big first step in getting resilience across the board, is making sure that people actually know the climate impacts that they're going to be facing, whether that's flooding, a more extreme heat, wildfire risk. Because once someone has information, they're empowered to make an informed decision. And so a big aspect of our work is to get information into those people's hands, such as through real estate disclosure laws.
That's a good pivot here. We're going to be talking about flood disclosure for this whole episode. Now, you talked a bit about what NRC does, but why is flood disclosure such an important issue for you guys right now?
Yeah, that's a great question. Flood disclosure is important because it gives people the right to know their flood risk when they're about to buy a property, or sometimes even rent a property. And you really need to know your flood risk in order to make an informed decision about how to best protect yourself and your family. Buying a house is often the biggest financial investment a person will make in their lifetime, and they want to be able to make sure that investment is protected. However, a huge problem is that when people buy a house, they don't necessarily know that they need to buy flood insurance. Almost every single homeowner's insurance policy excludes flood damage from the policy. You have to buy a separate policy to protect yourself from flooding. And so if you buy a house, don't know that's flooded in the past, you think you're going to be okay, you're outside a flood zone according to FEMA, and then you flood, you could be facing tens of thousands of dollars of damage that you're not insured for. And so this is a really strong way of helping people get to know the risk that they're facing so that they can act to either get insurance, to reduce their risk through adapting certain aspects of their home, whether that's raising the air conditioning unit or raising their furnace, to really make sure that they're protected in the long run.
Not everyone would think about this, but you have to become experts at the real estate market to do this kind of climate adaptation plan.
Yes and no. So I think the biggest factor is that you're trying to make sure that people get the information they need before they're committed to purchasing a home is really key. And that we've done through our research has shown that is really comes down to disclosure. So real estate disclosure, I'm sure as many know, is a form that you get if you're in a state that has real estate disclosure that lists certain hazards or issues with the house that a seller has to disclose, whether that's asbestos, whether that's how old the roof is. But a lot of states don't have really strong disclosures on natural hazards and flooding. And so when you get that form as a home buyer, it should tell you the risks that you're going to face in purchasing that home. So you can make that informed decision. And what we were saying through our research is that there's a lot of states that don't have that requirement for flooding in particular. It's really key to our advocacy is making sure that those states can change their laws so homebuyers have a right to know their flood risk during the real estate disclosure process. Because often the best information you can get on a home is to ask the homeowner, is to see what the homeowner knows, because they'll have the information from firsthand experience. And that's really should be transmitted to the buyer in order to make sure that the transactions are fair and the market works efficiently.
We're going to hear from quite a few experts in this episode, but you're grounding us in Flood Disclosure 101. And as you just talked about, state, with flood disclosure law, this is a state issue, right? The feds aren't really involved.
Correct. So the majority of disclosure laws in this country are state-based. I mean, the federal government has a uniform disclosure law on lead-based paint, but that's implemented at the state level. And most states, for the rest of their disclosure requirements, it's up to them what they require to be disclosed. And so that's why we're really taking a state-by-state approach versus trying to get a federal change. There's a possibility that we could do a federal change through a program like the National Flood Insurance Program, but that's a really heavy lift. And it's much easier to work in the states where you can tailor the disclosure requirements based on the state itself, their laws and their geographic issues.
At least for the time being, even though it's a state-by-state issue, the feds do play a role in regarding these FEMA mats that are part of how you kind of get this information, right?
Yeah, that's a great call. So the National Flood Insurance Program, for better or worse, is the main program for addressing flood risk across the United States. It's run by the Federal Emergency Management Agency. And what it does is that it provides flood insurance to homeowners and renters to protect themselves from major flood events. And it's often the only source of flood insurance available to homeowners and renters. But it does a lot more than just provide insurance. The program also maps flood risk. But the mapping program itself is not that great. Often the maps that show where flooding is going to happen are out of date. They're supposed to be updated every 5 years, but often they're 10, 20 years out of date. Another shortcoming is that these maps are binary. So they only depict really the 100-year floodplain. And if you're inside the 100-year floodplain, then there's different requirements in terms of how a structure has to be built or whether you have to buy flood insurance. But if you're just outside the 100-year floodplain, none of that applies. And so that creates this like binary choice where if you're inside the 100-year floodplain, you might find out your flood risk. If you're outside of it, you won't. But we know that flooding doesn't stay within those bounds. 30 to 40% of FEMA claims for flooding actually occur outside the map flood zone. And so that's why it's really important that any flood risk and any flood damage that's happened to a property, whether it's inside that map zone or outside that map zone, is communicated to a home buyer or renter.
All right, Joel, I'm going to get you on at the end of this episode. But before that, I want you to give us a preview. We've got some expert guests that you've recruited for this episode. Can you just give us a heads up a little bit about them?
Sure, I'd be happy to. Some of the guests that we'll be having on this episode today include Larry Bader from Milliman. Larry works on actuarial analysis, and the Milliman had done a study for us that shows just how much it costs to buy a previously flooded home. Some other guests include Ms. Jackie Jones. Mrs. Jones is a resident of Georgia and has experienced flooding herself in the past and has a great perspective on just how much information a person should get. Another person that we have on board will be Tyler Taba. Tyler works for the Waterfront Alliance and was key to helping pass flood disclosure laws in the state of New York. And we also have Brooks Rainey on the call. She is from the Southern Environmental Law Center. And joining us is Jesse Gorovich from the Environmental Defense Fund.
Okay, Joel, thanks for that introduction. Looking forward to this episode. I'll see you at the end of it.
Sounds great, Doug. Thank you.
Hey, Adapters. Joining me is Larry Bader. Larry is a data scientist with the property and casualty practice at Milliman. Hi, Larry. Welcome to the podcast.
Hey, thanks for having me.
First off, for my listeners, what is Milliman?
Milliman is a actuarial consulting firm, helps insurance companies, nonprofits, and other organizations just solve challenging problems that are out there.
All right. Could you give me some background on what you do there? You're a data scientist, but I guess it's a typical week or so besides doing this report.
Yeah, so it's really dynamic. So our office really focuses on homeowners, P&C insurance problems. Flood insurance falls under that. We help companies develop flood programs. We help companies with their rating algorithms and pricing plans to more accurately match rate to risk.
NRDC's bringing together experts, and you wrote a report for them. Why did NRDC commission you guys write the report in the first place?
Yeah, so NRDC came to us because we're an independent organization that's really good at doing analyses like this. We're able to provide them numbers in an independent way so that they can then take those numbers and do what they will with that analysis. But that analysis is independently done, and it's done at a very high quality level.
Maybe I need to ask them this too, but curious, so why just the 25 states?
So we had done a previous study with them looking at 3 states that are very flood prone. And then they wanted to expand out. And I think the states were based on states that did not have, by their grading, good disclosure laws for previous flood damage.
But what were some of the key findings?
So really the goal of the study was to identify homes that had been previously flooded and compare those to all the other homes in the state and then the costs associated with those. So for instance, we found that there's 689,000 homes in the study area that had previous flood damage. And then when we compare the costs associated with those to all the other homes in the study area, it's a very dramatic difference. You're talking about thousands of dollars in costs versus hundreds of dollars in cost. So that's really the main goal of the study and kind of the biggest finding that we had.
All right. You just answered that, but I maybe want you to dig into that a little bit more. It's just like the financial implications of buying a previously flooded home. What are the things that people have to think about when that happens?
Yeah, the way we quantify the costs associated with flooding is a value. It's called an average annual loss. So the way to think about that is when you buy a home, they say you should budget X number of dollars every month or every year for home maintenance costs. Now, you're not going to pay that every month or every year. And sometimes it's going to be a little bit more and a little bit less, but you should expect to pay this amount of money. We do the same thing in flooding. For flood is we're saying, all right, for this home, it has an average annual loss of, say, $1,000. So most years you're not going to have a loss, but then when you do have a loss, it might be $10,000 or $20,000. So you should budget, say, $1,000 every month to be able to cover that loss when it happened. What we did was we looked at it and we said, all right, if a home had been previously flooded, let's say in Alabama, the state average for that is just over $5,000 per year that you could expect to pay for, or that you should budget for your flood costs, versus all the homes in Alabama had a flood cost, an average annual loss of $77. That's where that dramatic dollar differences come in. Is if you're buying a previously flooded home, the risk and the costs associated with that home could be significantly higher than you would expect on the state.
How did climate change factor into this assessment that you're doing?
We looked at climate change, and so we had 3 scenarios that we looked at. So there's the standard scenario, which is the world as it is. There's what we call the medium scenario, which is based on the RCP 4.5 scenario, which is if we stabilize and reduce greenhouse gas emissions in the near future, what the climate would look like moving forward in that. And then the high scenario was the RCP 8.5 scenario, which is if we just don't do anything and we just keep going as we're going. So as you would expect, those costs that I mentioned before, they go up under the medium scenario and under the high scenario. But that amount that they go up is very different for previously flooded homes versus previously, or for all the other homes in the state. So for instance, in Maryland, when you go from the standard scenario to the high scenario, it goes up by 126% for a home that had previous flood damage. For all the other homes in the state, it goes up by 33%. And that dollar amount associated with that 33% is only $14. Whereas for the previously flooded home, it's close to $3,000. So again, it's the costs associated with a previously flooded home are significantly higher, and they get even higher under what we expect under climate change.
I'm curious, just you talked about these various models, the high models, the middle model, and increasingly you're seeing private firms come in with their own climate models, and a lot of local governments, state governments are starting to use these. Did that come into at all? Were you seeing that as a type of information that people might actually make decisions based on their flood risk? What are you seeing with those kind of private players coming into it?
That's not something that I interact with a lot. We utilize the catastrophe model for this study. We use the cat risk catastrophe model, and they're really the experts as far as what those climate scenarios are and how they interact with the different factors that go into flood costs, like sea level rise, things like that. That's not something that we really focused on. We just use the data that we had from the catastrophe modeling company.
NRDC commissioned this, and they're obviously going to find this information very useful as they interact with states and such. But just let's say from a home buyer perspective, what would you say to them that would be a key takeaway from the report?
I think it's really important to research the home that you're buying and look at the flood risk that you have. Flood risk is very geographic centric, and it changes very dramatically just in very small geographic windows, right? If I'm right on a river, my flood risk can be very high, but then if I just get a little bit further back, it can be significantly lower. Not a lot of homes in the United States have flood risk, but flooding can be a very costly natural disaster to happen. I hope that people can be more informed about the risks of the home that they're purchasing or that they're living in. And then I think there's a huge value in actually putting a number to that. If you live next to a river and live right next to an ocean, your flood risk is quote unquote high, but that high could be $1,000. It could be $9,000. And I think quantifying that can be really valuable. So we looked at not just state level averages, but we looked at MSA levels. So actually looking at the cities and the different values at the city.
All right. You've talked about a couple states here. We obviously can't get into all of them, but could you talk briefly about Florida? And it stands out as the riskiest state for buying a previous flooded home. Can you explain why Florida ranks at the top in 5 of the 6 different risk metrics?
Yeah, Florida is obviously just a very flood-prone state. A lot of that comes from the hurricanes that hit hurricane that we hear a lot about in the news. When we do the analysis, a lot of the events that we're looking at to identify those homes are hurricanes hitting Florida. We have data on how many insured claims there are, actual claims that people make, and Florida has the highest for those. They have the highest average paid claim amount. So it's just a lot of flood risk revolves around Florida because of the hurricanes and the risk that's there.
So it's very interesting to me because I grew up in Florida. I still have family in Florida, but now I'm living in Arizona, and that's actually probably one of the least at-risk states.
Yeah, as you would imagine, there's not a lot of flooding in Arizona, but that's also to say that there's not no flooding in Arizona. The risk is different in all these different states, but there still is flooding there, and maybe the difference between the two types of homes is a little bit less, but it is higher, right? We did find in Arizona that a previously flooded home does have higher costs with it. I think I'm all for more information being out there. So it's good to be able to know that for home buyers.
Yeah, we have the monsoon season, and it's pretty consistent. People didn't really build in those flood zones, but occasionally we just have some massive monsoon rain. And yeah, it'll hit some folks, but those are pretty rare. And if people want to poke around other work that you're doing at Milliman, what do you recommend that they do?
Yeah, you can go to milliman.com and you can find all the different articles that we write, all the different reports. Milliman works across all areas: health, life, property and casualty, employee benefits. So we're doing a lot of really interesting work, and you can find it on our website.
We'll have the link to this 25-state study on the show notes for this episode. Thanks for coming on the podcast, Larry.
Yeah, thanks for having me. I really appreciate it.
Hey, Adapters. Joining me is Jackie Jones. Hey, Jackie, welcome to the podcast.
Thanks for having me.
All right, Jackie, so where are you located?
I am in Reidsville, Georgia, which is in southeast Georgia, and Savannah is about an hour and a half south of me.
Well, I used to live in Georgia a long time ago, and I know the area, and it's a beautiful area. So how long have you lived there?
7 years in I'm in Reidsville, Georgia. I've been here 7 years.
Can you just, before we get into the whole flooding conversation, tell us a little bit about Reidsville? What's it like there? It's a small town, right?
It's very small. We have one stoplight and it's very toxic and it's very unwilling to change and improve. There's not much here and the citizens apparently don't want to have much here.
All right.
Yeah.
All right. All right. There's a glowing endorsement. I appreciate your honesty. We're going to talk a bit about some flooding that you experienced and tell us a bit about that. You went through, your home was actually flooded.
Well, my home wasn't flooded. My property was another inch up to the windowsill, and it would have came over the windowsill back in March of 2020.
As you were seeing that, I can just assume you were probably pretty nervous, but what was going through your mind? Take us there at that right when you was there on the edge.
I still remember the day. It had rained. It was torrential rains for 3 nights, 3 days straight. It just would not let up. And I saw the water creeping up to the house. And I kept thinking, it's going to stop. It's not going to get any higher. It's not going to come any closer. And when it got up to the windowsill like it did, I just went numb. There was nothing I could do. There was nothing I could do about it. I tried to call the mayor at the time. Of course, he wasn't answering the phone. I just looked at it, took some pictures and prayed. That's all I could do.
Wow, that sounds pretty harrowing. And so help us visualize, let my listeners. So are you, your home and it's your property that's flooding? Are you in a neighborhood? Are you by yourself? What's around you?
There's 2 other houses on this street and I'm on a side street and the cross street has houses on it. Everybody around me on my street is the other 2 houses on my street. The whole road is flooded at this point. As far as you can see, there's nothing but water. Nothing but water, because this whole street and specifically my property sits down in a bowl. So when it rains, the water just accumulates on my property. And I found out last year that the water, the way this area was built was so that it specifically runs to my property. The
Wow.
water from 129 other houses comes to my property. It pools on my property. It was designed that way.
Oh my goodness, that sounds terrible. All right, so we're going to get into that, the idea that you didn't even know about that when you bought your home. So when the floods finally went down, you were able to get through that. Your problems just got started too. Can you tell us a bit about that?
I reached out to City Hall, had a meeting with the mayor at the time. He was unresponsive and gaslighting the entire meeting. Me and the neighbor who sits behind, I need to describe how it's set up. It's my house to the east. Then there's another house behind me. And then there's another house on the other side of that house. The water comes from the second house I just mentioned, but it also comes on the side. And the individual who owns the second house that I spoke of, he also owns the property on the side of me. So all of that, not just my property, all of that property gets flooded before mine does.
Wow.
So he was at the meeting. His name is Mr. Johnson. He was at the meeting with me, and we were trying to explain to the mayor what was going on, and he gaslighted us the whole time. And I told him, I said, look, I'm a retired federal employee. What you're allowing to take place here is not right. It's wrong. Okay. And that kind of scared him. And he's not the mayor now, but he's still scared of me. But I saw I was not going to get anywhere with him. And I'm the type of person that if I'm telling you what's wrong and you're not willing to do something about it, I'm going to go over your head. And that's what I did. I contacted FEMA, didn't get anywhere with them because they were like, it's a localized problem. But Anthropocene Alliance, they jumped in and they got FEMA and the Army Corps of Engineers, who I also contacted to look into things. And I contacted the President of the United States, didn't get anywhere with that. Contacted the Georgia Environmental Protection Division, didn't get anywhere. Everybody I contacted, because I'm just a little old Black woman complaining about floodwater, nobody would listen to me until I got affiliated with Anthropocene Alliance. After contacting Harriet Festing, She got me in touch with the Army Corps of Engineers again. We had a bunch of meetings. They did an assessment, and the assessment said what I had been saying all along, and I'm still saying it. The infrastructure here in Reedsville, Georgia is not adequate. It is antiquated. It is rusted out. Okay. I'm getting frustrated. I'm sorry.
Just bringing back memories. I get it.
Yeah.
That sounds horrible. And you had mentioned that all these homes drain into where your area, like where your house is at. And I'm curious about that. That's what we're talking about in this episode here is that did you have any clue when you bought your home that it was at risk of flooding? Were you given any kind of information prior to actually buying your home?
No, I was not. I was told specifically that it did not flood. But then I found out later that information was based on data from 15 years ago.
So where did you find the information when you were looking into it that it does actually flood? What kind of maps were these, like FEMA maps? How did you figure that out?
We hired Anthropocene Alliance, got a grant from the National Fish and Wildlife Fund. And with that grant, we hired Sherwood Designs. And they came in and they did an assessment and they did all the maps and the scientific data. They did all of that to prove that where the water, I still got the maps. They show how the water flows from the 129 other properties and that it pools on my property. That could not have been done naturally. That had to have been done on purpose. And then I found out from an old timer that where my house sits was a duck pond. So whoever had this house built got exemptions from the county or whatever and got permission to build this house on top of a duck pond.
Oh my goodness.
Yeah.
All right. You've gone through this flooding, obviously very traumatic. And has it changed the way that you think about home ownership?
No, I would still buy a home, but I would get a hydrology report done, no matter how much it would cost to find out the flow of water in the area and specifically on the property that I would look into buying. I do not do well in apartment dwellings or in close proximity to other people. So I need at least a half an acre, which is what I have now. But I also need to know that I'm not going to be flooded out.
All right. What advice would you give to someone looking to buying a home? And you just mentioned that you would go get a hydrologist. Any other advice for homeowners out there that you would give them after you've gone through this?
Talk to the people that have lived there a long time, not just the people close by, but in the neighborhood further out. Ask them what the history is. If you can, do research online for the area. Pull up Environmental Protection Agency maps, because not only does it flood here, it's toxic. There's asbestos, which is proven by the EPA. There's toxins in the water, the soil, the air. Everything. It's toxic here. Cancer, there's a cancer bubble here, a cancer cluster. That's been proven. People living right next door to each other either have cancer or are dying of it or have already died from it. I have tumors on my liver that were not there before I bought this house.
Oh, wow. That's awful.
Yeah, so it's incredibly toxic here. Everybody knows it, but nobody's doing anything about it. So it's not just flood runoff and the toxins that's in the stormwater runoff. It's everything here is toxic.
I've talked to some people for this episode that their efforts underway in states that it would require homeowners to disclose if it's been flooded before. Do you think real estate agents, the actual homeowner, or local governments, state governments, should they do more to disclose risk? Who do you think should play a bigger role there?
I think everybody should play a bigger role.
What do you want policymakers and experts to understand about the real life impact of flooding on homeowners like you? Obviously, that's very traumatic dealing with the actual flood, but your policymakers, what additional advice would you give them?
They need to not hide behind their desk in DC or in Georgia or wherever they're sitting at. They need to go to different areas, all areas of whatever state that they are representing, and talk to the people face to face. Don't hide behind your desk. Find out what's going on with people. Don't just expect them to call and tell you. Go to the areas. Talk to the people, because flooding isn't just flooding. It affects people's health. And it's not just the infrastructure that's causing the bad health here. It's the flooding as well and the toxins that are in the stormwater runoff. So they need to make themselves more visible and more transparent to the people and let them know that they just didn't want just their vote, but they actually do care.
Okay, I think it was pretty obvious, but just I want to clarify, you are still in the same home that flooded, right?
Yes.
Now, has there been any steps, has been any of the groups that have helped you to make your home less prone to flooding? Or if another big rain event happens, you're still likely to get flooded like you did last time?
If another rain event happens, I'm still likely to get flooded. But last year, Harriet Festing of Anthropocene Alliance took 6 months to write up a grant that would have, if City Hall had approved it, if we had gotten the grant, would have stopped just about all of the flooding. They had drawn up plans for a wetlands on 20 acres, not just for wetlands, but for a playground and the equipment and the benches and all and pickleball courts, basketball courts. It was going to be a beautiful thing. And all that City Hall, we needed a statutory, EPA required a statutory partner to be on board even to submit the grant. It was a $12 million grant. And City Hall decided no, they would not do it. And all they had to do was sign off on it. Anthropocene Alliance was going to do all the legwork, all the hiring, all the bidding, but they said, no, we don't want that. We want a community center. Yeah, but that's not what this is for. This is to address flooding. And Harriet promised them, if you just sign off on it, we will help you get a community center later on. But right now we're trying to deal with the flooding. No, we don't want to do that. They didn't want to address the flooding. Like I said, when I first started talking, they want everything to stay just like it is. They want to keep the minorities in the area oppressed, and they want to keep themselves rich and entitled. Here we are.
Sounds local, state, and federal levels are not there to help you. So that's horrible. All right, Jackie, you've given me a ton of information here. This is very enlightening. And I guess I want to leave it on a somewhat positive note. You didn't really have too many nice things to say about Reidsville, but if someone was visiting South Georgia, is there somewhere you would recommend that they'd go?
Yeah, Vidalia or Pooler or Savannah.
Okay. I've been to Savannah. Beautiful place.
Avoid Reidsville altogether.
Quite the ambassador for Reidsville. I love it. Jackie, it's a pleasure talking to you. I hope the next big rain event, you're actually able to evacuate and not be in the storm. Sometimes I know that can be difficult, but yeah, that sounded very harrowing and it came very close. So I hope you can do it. And I hope you can fight the fight and maybe get some changes made there.
Yes. Thank you so much.
Hey, Adapters. Joining me is Jesse Gurovich. Jesse is an economist in the economics team at the Environmental Defense Fund. Hi, Jesse. Welcome to the podcast.
Hi, Doug. It's great to be here.
Let's ground my listeners. What is EDF?
EDF is an environmental advocacy organization focused on state, federal, and international climate policy.
You're an economist. Tell us maybe, what do you typically do? We're going to be talking about a specific area on the spot, but what do you do there generally?
Sure. My work generally focuses on the ways in which housing, insurance, and mortgage markets can adapt to the impacts of climate change. And I'm particularly focused on the ways in which economic impacts of climate change are distributed among demographic and socioeconomic groups in the U.S. And in understanding that, the hope is to support policymakers in developing policies to more equitably adapt to climate impacts.
A lot of people assume homebuyers are really well informed about flood risks before they purchase their home, but your research is suggesting otherwise. And so what are some of the biggest misconceptions about how flood risk information is communicated in these real estate transactions?
Sure. So we know that in general, housing markets operate more efficiently when both buyers and sellers have complete information about a particular property. In the U.S., historically, FEMA's flood insurance rate maps have been the primary tool for communicating a property's exposure to flood risk to participants in the housing market. But we know that those flood maps are often outdated, they lack coverage in parts of the country, and they do not account for impacts of climate change. Complementing the role of these flood maps disclosures of property's exposure to flood risk can be a really important tool for communicating that risk to potential buyers.
What I think is very interesting that your research points out that disadvantaged communities, they're disproportionately exposed to flood risk. So what is this? Is this a policy failure? Is this a market failure? Is it a combination?
Yeah, so we know from extensive research that disadvantaged and vulnerable populations across the U.S. are disproportionately exposed to all types of impacts from climate change. And we know that these disparities are particularly true for exposure to flood risk among low-income households and people of color across the U.S. There are multiple underlying reasons for what might be causing these disparities, particularly in the context of flood risk. Of course, there's been documented disinvestment in flood risk reduction in low-income communities, which has definitely been a contributing factor. Another reason is that low-income households may be sorting into these areas that are exposed to high flood risk. This may in part be due to their lower ability to pay to avoid exposure to flood risk. This may also be due to factors associated with housing discrimination in the U.S. But there's another key pathway that I'd like to focus on here is that some households may have differences in access to information about property's flood risk, and that may fall across different types of income groups, where higher income groups are more informed about a property's flood risk than others. I think this is in part evidenced by the fact that Black and Hispanic populations are disproportionately exposed to what I would call hidden flood risk. So flood risk that is outside of FEMA's designated flood zones. Flood risk disclosures can be a really important tool in closing this informational gap or these informational asymmetries between different types of buyers and essentially put everyone on the same playing field in terms of their ability to access information about property's flood risk. So in effect, the implementation of these disclosure requirements may in fact have progressive distributional impacts as far as who is exposed to those costs associated with flooding.
And I'm curious too, is that low-income people are disproportionately impacted. Do you see variations regionally? I'm just imagining rural areas that are areas that might be flooded, but regionally, like, does anything pop out differently?
So when we look at the distribution of property values for homes that are exposed to flood risk, we tend to see somewhat of a bimodal distribution. So there's a large number of lower value properties that are exposed to flood risk, and then there's a large proportion of higher value properties that are exposed to flood risk. And in general, this tends to fall along the lines of inland and coastal risk, where properties that are exposed to coastal flood risk tend to be higher value, whereas properties that are exposed to riverine flood risk tend to be lower value.
You found that homes subject to flood and wildfire disclosure laws often sell for less than comparable properties without that disclosure. What, again, is that telling us about the role of information in shaping these housing markets?
I think what that's showing is that buyers are using that disclosure information in formulating their offers and deciding how to bid on a particular property. So absent that disclosure, a home buyer may not learn about a property's flood risk until very late in the home buying process, at which point they're locked into a particular offer. But what we see is that when that disclosure is included in the listing documents for a property, that might shift and alter how a home buyer considers that offer.
But in a way that they're probably not going to get more money for the property.
The home buyer would be making a lower offer, which is reflecting the expected future costs associated with exposure to flood risk.
This is probably a big issue, and this is what I imagine you have to solve this, that, you know, you want to do the right thing, you want to have transparent laws, but you're a homeowner who wants to sell your property, and then they can't get as much for it when there's this information available to the home buyer. And is that just like a kind of a baseline reality that we should live with? But you see what I'm saying? It might be just harder to sell the home, and you could be a low income person and you could be at disadvantage.
I see what you're saying here. I think there's certainly trade-offs and that particular parties may be negatively affected by disclosures. But if a property is selling for more because information about that property's risk is being obscured or is unknown, and housing markets aren't working properly or efficiently. For a housing market to operate efficiently, all parties need to have complete information. And absent that information about property's flood risk, that can create certain types of perverse incentives for continuing to develop in high-risk areas, or may not create the right incentives to mitigate risk to that property.
So I imagine that just need for collective disclosure laws. It's just if one local area has it and the other doesn't, that other place that doesn't might be an advantage of selling homes. And so I guess it just demonstrates, all right, states need to be thinking about this in just broader areas.
Disclosures typically occur on the state level, so pretty broad geographic areas as far as housing markets are concerned. But to your point, I do think that having disclosure occur at the federal level could be a really powerful tool for essentially creating kind of a level playing field as far as information provision about flood risk across the United States.
We're not quite there yet at the federal level, but let's talk about some states that are doing it. They are passing these disclosure laws. And New York, New Jersey are a couple examples. So what can we learn from those states? What are they doing well to get to this stage where they have those?
From a research perspective, I think it's too soon to tell what the effects of disclosure are in those particular states that have just implemented or updated their disclosures just within the last couple of years. I think we'll have to wait a little bit more to gain those types of retrospective insights. But we can look at states that have implemented disclosures much earlier in time. And what we know from those states is that properties that receive that disclosure information sell for less than comparably at-risk properties, indicating that buyers are using that information in formulating their offer. That is, of course, a really key tool in providing that information about flood risk to all buyers in that market.
Some of the FEMA maps, the flood maps, are outdated or they're incomplete. And you're probably seeing, too, is that there's a lot of private sector climate modeling groups coming online, and they're doing this at the local level and such. And so do you see that that maybe could create some inconsistent information? So even if there's a disclosure law, it's like, well, we're using with this private firm, or is it with the expectation we're only going to accept one map and it be the FEMA map? Because you're seeing a lot of climate modeling groups come online.
We know that the FEMA maps have a range of deficiencies. They're out of date. They don't reflect climate impacts, and they lack coverage in certain parts of the country. What I would say is that these different sources of information, whether it's coming from FEMA flood maps, whether it's coming from disclosures, whether it's coming from private sector models, that information is all complementary. And in buying a home, which is for many households their largest financial investment, they should be considering as many different types of information as possible. I think disclosures are somewhat unique, at least in some states, where they require that sellers disclose information about whether a property has been previously damaged by flooding. So in contrast to some of these other forms of model-based estimates of flooding, previous damage is a unique way of learning about a property's risk that doesn't rely on these complex flood models.
Big picture here. If you're looking ahead, do you think climate risk will become a dominant factor in shaping real estate markets? Or will other, I guess, more predictable economic pressures like interest rates or affordability will continue to be the main thing, the main driver?
Absolutely. I think we're already starting to see housing markets respond to climate risk. That's only expected to increase as insurance prices continue to rise and as there may be continued issues with insurers pulling back from certain areas. On the mortgage side, we know that following these large disasters, there tends to be a spike in mortgage delinquencies and defaults. And if mortgage lenders start accounting for that risk, that could also play a major role in shaping the way in which housing markets are responding to climate impacts.
It's very early days, but we're seeing almost immediately that the feds are pulling back on regulating a lot of these areas. We don't know what FEMA might do. And of course, climate change are pulling back in a big way. How do you think that's going to impact some of these disclosure efforts that we're seeing happening?
I think, if anything, that just further emphasizes the need for state-level disclosure requirements, both in terms of more states implementing disclosure requirements, but also increasing their consistency across states and the types of information that they include. As the federal government may pull back from providing information about climate risk, I think that makes the role of states even more critical in providing that type of public good.
Jesse, it's been great talking to you. If people want to learn more about EDF and specifically the work that you're doing, what do you recommend?
To learn more about this work, EDF has a number of terrific blog series that I would suggest that folks follow. We're also active on social media. So please follow the EDF pages.
Thanks, Jesse, for coming on the podcast.
Thanks so much, Doug.
Hey, Adapters. Joining me is Brooks Rainey Pearson. Brooks is the Legislative Counsel at the Southern Environmental Law Center. Hi, Brooks. Welcome to the podcast.
Hi, Doug. Thanks for having me.
I love you guys. I told you in a previous conversation that I kind of worked with you when I used to live in Georgia a long time ago. But for those people not familiar with the Southern Environmental Law Center, what do you guys do there?
We are essentially the pro bono law firm for other nonprofit environmental organizations. So we represent other environmental NGOs like NRDC, Sierra Club, Waterkeeper Alliance, a whole range. Only about 25% of what we do is litigation. We work in all three branches of government. We work at all three levels of government. And the more we can get accomplished without going to court, the better for our donors.
We're going to talk about flood disclosure in this episode, but just give us a little bit more background. You're the Legislative Counsel. What's a typical week for you? You're just not working on disclosure.
Right. There is no typical week. So I am our lobbyist to the North Carolina General Assembly. In North Carolina, we have a part-time General Assembly, so they're not in session all year. I do anything Raleigh facing. Raleigh's the capital of North Carolina. So anything with the governor's office, the agencies, the commissions and boards, more of the executive and legislative branch. I do very little in the judicial branch. So this came across my desk because we were petitioning the Real Estate Commission, which is an executive board. And that's how I ended up working on this.
So let's get some background here. And we're hearing from other states in this episode too, but what motivated you guys to file this petition and what kind of specific problem are you trying to address with this rule change?
Sure. In North Carolina, we are seeing increasing flooding events, and of course, it's climate change, but we had Hurricane Helene this year, which was 300 miles inland. But a lot of this is happening at the coast. Hurricanes Florence and Matthew, we're seeing sea level rise. And so we're seeing a lot more property flooding, and the FEMA maps just can't keep up. And a real estate disclosure only required that you say if a house is in a FEMA floodplain. But really, that's not the best way to know if a house is going to flood. And we wanted home buyers to have the same information that home sellers had about the house's flood history and any history of getting federal aid for flooding, just to make a more level playing field. And so that people who buy houses can make smarter decisions about things like flood insurance and elevation.
There's this legislative approach, but this rule is the thing that actually passed. The North Carolina Real Estate Commission finalized a rule. Explain that process, and let's talk about what's in that.
Absolutely. So another thing that spurred this is that other similarly situated states have been moving toward this. Mississippi, Louisiana, Texas. So other conservative-leaning states that are seeing increased flooding. So it was part of a trend in the South. The legislature, we decided, was not our best venue for getting this done. Our legislature currently is not super environmentally friendly, and we thought that the Real Estate Commission was just a better fit for this ask. Also because they're the ones who are in charge of updating the real estate disclosure form. It was just the cleanest way to go about it. So we petitioned them. There's a formal process for petitioning the Real Estate Commission to add questions to the residential real estate disclosure form. We petitioned that they add 5 new questions. And they accepted the petition, and they debated back and forth and changed a little bit of the wording. But for the most part, they took our questions as they were and adopted them. And now the new form, which came out last July 2024, contains these questions so that people who buy houses can have a more informed understanding of the flood history of the house.
Give us those 4 questions.
Sure. Has any structure on the property ever flooded? If yes, provide the number of times. Have you ever filed a claim for flood damage on the property with any insurance provider, including the National Flood Insurance Program? Is there flood insurance on the property? If yes, provide the premium amount. Have you or previous owners received assistance from FEMA or any other federal disaster flood assistance for flood damage to the property? And is there a FEMA elevation certificate for the property? Now, it's important to note that there is a third column. It's not just yes or no. There's a choose not to disclose. So a property owner can choose not to answer these questions, but that is also information for a buyer.
Red flag. Give us a bit of the timing on this. And so it passed and it's out there now though, right? How much time what's going on there? Is it being used a lot?
We don't yet have data. It's on the form. So it's being used every time a house is sold, a residential real estate transaction occurs in North Carolina. These 5 questions are being asked and answered. I don't have a sense for what percentage of people are choosing not to answer it, or how the answers are coming down, or how behavior is changing because of it. One thing we did very carefully research before we got into this, because we were very concerned that there might be any justice implications. We didn't want people in low-lying areas to get trapped in houses, unable to sell them because of these questions. So we did look into other states and found that these questions, when added to the real estate disclosure form, did not keep the house from selling. It might change the behavior of the buyer, but it didn't slow down the market at all. And that might be one reason why we didn't see the realtors organizations pushing back against this. We really had no pushback.
Yeah, I get that. And for the seller, that's probably good news. But at the end of the day, it's a new person moving into a at-risk house, and that's not good.
I think if I were buying a house that had flooded before, I would make different decisions. I might change drainage. I might put important documents on the second floor. But a really critical piece of this is that for a property that has received federal disaster flood assistance, if you don't then carry flood insurance on that property, you might not be able to obtain help again from the federal government. And we saw that after Hurricane Florence. People didn't know their house had flooded. They applied for federal aid and they were denied because they didn't have flood insurance, but they just didn't know. So if the federal government is going to require that, then it's critical that we let owners know so that they can choose to carry flood insurance.
You mentioned FEMA quite a bit, and I've had this conversation with other people too. FEMA is going through some things right now, as is most federal agencies. How could that ultimately impact what you are doing in North Carolina? Are you guys insulated from that just because it's yours to the state level and it's really happening at the ownership level? But is there any concern whatsoever it could complicate what you're trying to do here?
I'm not sure that the answer to that, I'm not sure that it would directly complicate what we're doing here. It's definitely complicating disaster recovery in the western part of our state right now from Hurricane Helene, with the uncertainty of what is happening with FEMA. But for this is now locked into our form, so it has to be answered. It's possible that some of these questions could become irrelevant if FEMA aid disappears, and it wouldn't matter if you were carrying flood insurance on the property. You wouldn't get aid anyway. So I can see disaster scenarios like that. One thing I will point out with FEMA in North Carolina is that FEMA conducts the flood mapping, and they're woefully outdated. And it's not any negative comment on FEMA, because they just can't keep up because of climate change. The floodplains are changing so quickly. When we filed this petition, at that point, 64% of our flood maps in North Carolina were outdated. So I do worry with the cutback of personnel and federal employees that an agency that was already having trouble keeping up with climate change is just not going to do well with fewer resources, fewer employees.
All right. Can you tell us a bit about your partnering with NRDC? How does that all work? This is a whole NRDC episode, and they obviously have partners in different states. How's that worked out?
Sure. We work really closely with NRDC. They're wonderful partners of ours. We were approached by NRDC to take this up. They have an initiative to get this in every state. They are really doing a good job staying on top of flood disclosure throughout the United States. They saw that we didn't have up-to-date standards in North Carolina. They approached Southern Environmental Law Center to see if we would partner with them on this. And I think that's mostly because their attorneys who work on this are mostly based in New York and Chicago. And we really wanted a local group bringing this petition. So although we did represent NRDC, we also represented statewide organizations as well as several really small local nonprofits. And NRDC was very much on board with that. Let's get a wide range of clients here, of petitioners. And we were really excited to partner with them and worked really well together, and would love to work with them again in the future.
All right. So these questions are there and now available for the actual person looking to buy a home. But was public awareness necessary for this? Did that really matter? I'm just thinking sometimes people might be confused by this. Was the public awareness campaign part of any of this?
There was not a public awareness campaign, but what there was outreach to realtors, because they're the ones who have to walk sellers through filling out this form. There was a public comment period, and the overwhelming majority of comments were positive, but there were some that were concerned. What if I don't know this? Or what if my seller doesn't know if the house is ever flooded? But the way the residential real estate disclosure form works, there's not going to be liability on the realtor if their client doesn't know the answer to one of the questions, for example. The advice in the end was basically do your best. You're representing that your client has answered these questions to the best of their knowledge. So there was a little bit of concern in the realtor community, not about these questions being part of the form, but about would the seller really know how to answer them?
I'm going down just a tangent here, but Asheville obviously got walloped by the hurricane last year, and it just created just catastrophic damage. I'm just curious for the Southern Environmental Law Center, is that like big on your plate? Was there a lot of loss? Is that something you've been involved in? Because it seems like the implications for what happened there are just so many legal issues.
Oh, it's huge. We have 2 offices in North Carolina, Chapel Hill and Asheville. Our Asheville office was just impacted hugely. And my colleagues in Asheville, they didn't have water for a month. And it was a giant tragedy. And we have been working on disaster recovery since September in the western part of the state. And there's just so many different facets of it. At first, it was helping organize the river keepers to walk E. coli kits out to people whose wells had been flooded out. And we needed to make sure we weren't going to have horrible outbreaks of illnesses because of the E. coli. And then it transitioned into getting roads and bridges rebuilt properly with the correct permits and which permits are okay to waive and which do we need. It's ongoing. Some of the rivers were moved. There are farms that lost all of their soil. There's just so many environmental issues, and the number of downed trees. We're very worried about forest fires this spring and summer and into the fall. And with the Forest Service cutting so many employees, we're worried about there being adequate firefighters if that occurs. It's going to be a long-term recovery.
Thanks for that. Before I let you go, can you, for my listeners, let's say they're in other states and stuff, any advice for them that maybe they want to, at the local government level or state government level, that they want to tackle something like what you've done with this rule? Any advice on how they could pursue that?
Oh, I'm going to mess up the name of it, but I know that NRDC has a scorecard or a report card of how different states are handling flood disclosure. So they can look at that and see how their state ranks, what their state's requirements are, and compare it to the stronger states like now North Carolina. And every state is different, but every state should have some kind of board like the Real Estate Commission, and citizens can petition for change.
I actually interviewed the author of that report, so they can check that out. There's 25 states, man, that 25 that did not get looked at, but at least there's 25. All right, Brooks, thank you for coming on the podcast, and thanks for the work that you're doing.
Thank you so much for inviting me. I really enjoyed it.
Hey, Adapters. Joining me is Tyler Taba. Tyler is the Director of Resilience at the Waterfront Alliance. Hi, Tyler. Welcome back to the podcast.
Hey, Doug. Great to be here.
I said that you're welcome back because I actually had you on before. I went to the Waterfront Conference. We're going to talk about that at the end of this interview. But tell us first, what is the Waterfront Alliance? Who are you guys?
Yeah, thanks for having us back. So the Waterfront Alliance is a nonprofit organization. We're based in New York City, but we have a New York and New Jersey harbor focus that's now expanding out across the nation through one of our program areas called WEDGE, or the Waterfront Edge Design Guidelines rating system. But we are at the core of what we do. We're an alliance. It's in our name. You can see it and hear it. And our mission is that together we lead the way for thriving and resilient waterfronts, shorelines, and coastlines. And we do that through educating young people about the impacts of climate change, advocating for climate legislation, working on public access to the waterfront, a healthy and green maritime industry, and a whole lot of other stuff. So that's really at the core of what we do.
Yep, I think it's very exciting. You guys are expanding nationally with that program. But we are here to talk about flood disclosure, and you guys are doing some really great things. And you're joining us here as part of this NRDC episode to highlight some of the flood disclosure work that's happening out there. Let's just get started there. I know you passed some legislation, which was a really big deal, but can you maybe give us a little bit of a history? What was going on in New York that you even needed it?
Yeah, absolutely. New York had a pretty interesting landscape for flood disclosure with relative to the rest of the nation, I would say. New York did have a property condition disclosure statement in place that came through a 2002 law called the Property Condition Disclosure Act. But that law allowed for a $500 credit to be paid by the seller of the property to the buyer, and the form was essentially tossed out. There's few states that operate like this. I think maybe Connecticut might have a similar protocol, but I know their legislator is working on a flood disclosure law now. And so what we were working on with our flood disclosure law in New York was to essentially remove that $500 credit from the process and add in a few additional questions around whether a property is in a mapped floodplain, whether an insurance claim has been filed on the property, and really basic information about the flood risk and flood history of the property so that when you're going through the home transaction process, you can make an informed decision about the place that you're going to call your home.
All right. I'm just very curious about that. So it was this $500 that you could basically pay to bury that information. Is that just a very simple way of thinking of it?
Yeah, absolutely. And one thing we found out is that around 80% of home transactions that we're going through were paying that $500 credit. So that means 80% of home transactions were going through without that information around flood risk and flood history, which is dangerous, I would think.
Yeah, listen, this is getting down, going down a rabbit hole. But the idea that you're purposely paying some sort of fee and hiding information, and someone might have to deal with some flood issues that could be thousands of dollars, tens of thousands of dollars that were all suppressed because of that $500 fee that they paid. I can't believe the state set it up that way.
Yeah, that's exactly how we felt. And so we were pretty lucky to have some strong leaders in the legislature and some strong advocates through a coalition called Rise to Resilience, which Waterfront Alliance convenes. And we worked really closely with NRDC and many other organizations to pull together a bill that would essentially rectify the process, close that $500 credit. And we were successful. And so I'd be happy to talk a little bit about the process there because it wasn't all easy. So there was a lot of hurdles we had to jump through to get that done.
Yeah. Tell us about that and all the partners that you had and ultimately, what was in that legislation? Obviously, correcting that $500 fee, but it's more than that, right?
Yeah, it is. So I think I mentioned we added a couple questions that I think were really important to be in any property condition disclosure statement, particularly around the insurance claims that are filed on a property. One thing that's a little wonky but important is that FEMA actually, if you have your insurance through the NFIP, FEMA cannot disclose publicly whether a claim has been filed on a property or not. I think it violates the Privacy Act and some things around personally identifiable information. So there's really no way to know whether a property has filed an insurance claim. And that's really important because that's one way of knowing that there's potentially thousands of dollars or hundreds of dollars in damages that you might be expecting to pay over the course of your ownership of the property. And I think one thing that came up quite a bit was, why do we have to do disclosure? Isn't it obvious if a home is at risk of flooding? And I think once upon a time, it might have been. Maybe if you live out on Long Island or somewhere in Coney Island in Brooklyn, and you can see the water, it might be obvious that there's probably some level of flood risk. But something that's happening more and more in New York is that, and across the nation really, is that inland communities are flooding more and more regularly from extreme weather, extreme rainfall events, even hurricanes that are passing over inland areas. We just saw North Carolina get devastated by a hurricane and most of that coming from rainfall. It's not obvious where the flood risks might be, and disclosure is a way that we really saw an opportunity to give plain, simple language around a property's flood risk so that people can make that informed decision and know about the full cost of what they're going into when they're deciding where they're going to live. A typical homeowner and renter might not really know that the sewer system in their neighborhood can withstand a 1.2 inch per hour rainstorm, or that the projections are now that there is going to be more 1.75 inch per hour rainstorms, right? And giving this information really clearly and simply to people in the transaction process is what we saw as the best way to make sure that we have a climate-informed constituency and people are really making a fully informed decision.
This group, Rise to Resilience, that you're part of, I think people would find it very interesting. Who were some of the partners in that? Were there sort of unusual groups coming together to join in that effort?
Yeah, definitely. So Rise to Resilience, I think we pride ourselves on being a really multidisciplinary coalition because the goal of the coalition is to make climate resilience an urgent policy priority. And climate resilience to us really touches on so many things in our society. It's not just about flooding and heat and even really climate issues. It's about resiliency in the economy and resiliency in housing and transportation and all these different things. And so our coalition is made up of organizations that represent that diversity. So the leaders really on this bill were the full coalition. It was Waterfront Alliance, NRDC, Environmental Defense Fund had a huge role in it. The Center for New York City Neighborhoods brought a great housing perspective to it. The New York League of Conservation Voters brought a really great sustainability lens to it. We Act for Environmental Justice brought a real justice and environmental justice focus to the bill. And we brought together a lot of different organizations, including community-based organizations in neighborhoods that are at high risk of flooding, and really made the case that this is something that we all care about. It's not just an environmental issue. It's really almost entirely at its core, it's a consumer protection issue. It's about transparency and it's about awareness. And so I think having that broad coalition behind it is really what enabled the bill to move forward and pass.
It's been about a year, I think, since it passed. Tell us, how's it been? It takes a while for these things to really figure out if it's working, what's going on.
Yeah, definitely. So one thing that's important to note here, too, is that in the process of getting the bill passed, we did have to, at one point, split the bill off. So one thing I should have said in the beginning is that there was no disclosure at all for renters in New York. And that was another thing that was a part of this bill. It's not as in-depth as the home buyer disclosure component because, of course, there's a lot of things that come with owning a home where you're the one that's filing the insurance claim or you're the one paying out the insurance premiums and things like that. And so the renter disclosure is a little more simple. It's really asking questions about whether the property's in a floodplain or if it's ever flooded before. And when we were going through the process with the legislator the first time around, we actually had to make a tough decision to split the bill off. There was a lot more opposition for the home buyer disclosure piece than the renter piece. And so when we were getting down to the end of the legislative session, we were stalling and seeing that there was not a lot of appetite to move the bill forward, partly because of some opposition from real estate interests and a couple of legal groups. And so what we did is we actually ended up removing the home buyer piece from the bill, amending the bill, and going forward with a renter piece only. So the first year, the bill actually just passed as a renter standalone bill. And then we came back to the legislator the year after and said, look, we left this on the table. We got the renters piece done. It's time to really make this a comprehensive flood disclosure bill. And so we ended up having to work with the legislator again and get that home buyer piece through. So the renter piece has been in effect now for about 2 years, and we haven't heard anything negative about how that's going. It's a much simpler process. The home buyer piece actually went into effect in March of last year, in March 2024. So in March of 2025, we will see the homebuyer piece actually be in effect for a full year. And we've seen a couple things happen already. We've seen that there's been some interest by a few real estate associations to create a waiver rider that would allow for the home seller and buyer to sign a waiver together and waive the disclosure process entirely. So it's not the $500 credit. It's actually just an agreement between the two parties. And we've heard that there's actually some implications for this that might have to go through the courts if that process really picks up traction. But it doesn't look like it's really picking up any traction because to do that, you as the buyer would have to sign a form essentially saying, I waive my right to know this information. So we don't really see that as a legitimate threat because I don't know that we're going to see a lot of home sellers decide to take that option on. And really the things that we're asking for in the form are simple questions. They're about where the property lies in a floodplain and whether an insurance claim has been filed and if it's flooded before. They're things that you would know. And so the fear of any litigation or anything happening around falsely disclosing information really would only come from intentionally withholding information. And that would really just fall under general malpractice or fraud. And I think some of the arguments that we've been seeing against the bill are not really in good faith. And as you're covering in this episode, there's so many other states that already have these disclosure laws. And so we're really happy to see New York really step up and be a big state that's taking this on and can hopefully inspire many other states to follow suit.
As we're all seeing, the feds are pulling back in a big way on anything climate change, and there's so much overlap with flood disclosure and kind of future impacts and such. Obviously, FEMA plays a big role in a lot of the information that's being generated. How is that going to affect you guys in New York for this legislation to work as effectively as it can?
Yeah, it's a great question. I'm hopeful that any rollbacks at FEMA are not going to impact this. And I actually think that makes a really strong case for why states have to step up here and pass these flood disclosure laws to really keep them enacted and intact within the state. there have been some conversations around FEMA actually doing some kind of national flood disclosure, and that would require a bit of regulatory reform at the federal level. I mentioned some of the concerns around personable identifiable information and the Privacy Act. So there's some things that would have to happen at the federal level to allow FEMA to do this. And we would certainly support FEMA being able to disclose that. Any way that you can get this information out to people is great. But I don't know that we're going to see that, especially in these next 4 years. And so I think it's really important for states to step up and do it. And another thing that I would note is that FEMA did release a report on flood disclosure, on statewide flood disclosure, where they basically listed out a series of best practices for the kinds of questions that should be included in a disclosure form. And we really looked at that tool and made sure that the New York law was crossing all those questions, checking all those boxes, and we did. And so I think other states can really look to FEMA's own guidelines for how to do statewide disclosure and get those laws in the books so that we're not really in a position where we're having to be cautious of any rollbacks at the federal level.
Yeah, that's very smart. Just states are going to have to state proof what they do because the Fed's, it's going to be a roller coaster, not 4 years, 8 years, whatever. So
exactly.
Yeah, you got to plan smart on that. Things are going relatively well there in New York, but any sort of improvements to the legislation or what you're doing here? Does Rise to Resilience have an agenda item coming up?
Yeah, great question. One thing that we've been looking at with respect to next steps on flood disclosure. So one thing is that the access to information can lead to uptake in flood insurance, but it can also spur tangible actions on solutions that residents who are experiencing regular flooding can take on. So if you know you're having a higher flood risk, there's power in that knowledge. You can take advantage of home retrofit programs, for example, or advocate for more public infrastructure and policies that would reduce your flood risk. So one thing that we did is we teamed up with the NYU Wagner School of Public Service to work on a report that shows what the economic implications of flood disclosure is and could be. And we found that access to that information not only saves lives, but it can also save you a lot of money.
Before I let you go, I want you to put a bit of a plug. You guys have your Waterfront Conference coming up, not too distant future. What's that all about? I attended and it was a fantastic event, but I'm going to let you give some more details.
It was great to have you there, Doug. This year, we're hosting our annual Waterfront Conference in Lower Manhattan. That's on May 13th. The theme for this year's conference is Committed to Progress, the Way Forward for Waterfronts and Coastlines. And we'll have tracks looking at climate policy, climate resilience across sectors, the view from 2075, where we're going to imagine what the New York and New Jersey harbor looks like in 50 years, and a technical track with some engineering PDH credits. We're actually going to also open up with some folks from the federal government who have retired or been impacted by some of the major rollbacks to climate jobs at our main stage lecture. It's a great conference and you don't want to miss it.
Oh, I want to hear that. I think you guys record most of those. I'll be curious what those feds have to say, and that'll even be a couple months from now and more things unfolding. So that, yeah, great that you're having that.
Awesome.
All right, Tyler, it's always a pleasure chatting with you and good luck with what you're doing. Thanks for coming on.
Thank you, Doug. I appreciate it.
Okay, adapters, we are back. We are going to wrap up this episode. Joel Scata of NRDC is back, and he's going to help wrap things up. Joel, I just had some fantastic conversations. These guys are doing some really amazing work. I wanted you to come back on just to close this out. And so you had mentioned this before, but I really want to hammer this point home, especially with people that are homeowners. Why is it so important for renters and homeowners to have access to this information?
Yeah, absolutely. And one of the biggest reasons why you need access to flood information is so you have the ability to make an informed decision about how to best protect your family and one of the biggest financial investments of your life, your home. We've seen through studies like the one that Milliman has done that buying a previously flooded home costs a significant amount of money over the course of a 30-year mortgage because of the likelihood for it to flood again, tens of thousands of dollars. And often if you don't have flood insurance as a homeowner, you can be on the hook for that. And so if you know ahead of time that your house has flooded in the past or is likely to flood in the future, you can take steps to protect yourself, like buying flood insurance, like mitigating the property through elevation, or even maybe not buying the property in the first place and looking elsewhere to see if you can find something that's going to be safe for your family.
It was really interesting to read into that Milliman report. And so you guys did everyone a great service by getting them to do it. 25 states. Is there any effort maybe to do the other 25 states? Because it was interesting for me. I'm in Arizona and I'm originally from Florida, and those were the extreme opposites. Florida is the number one at-risk state, and Arizona is pretty much the lowest at risk. But there's 25 other states. Are there any, efforts to maybe to finish that up?
Right now, we just are looking at analyzing states that NRDC gave either an F2 or a D2 on our disclosure scorecard. So NRDC in 2018 has developed a disclosure scorecard where we rank states on the quality of their real estate disclosure laws concerning flood risk. And at the time of the Milliman study, we had about under 25 states that either had a D or F. And we analyze those states because we want to make sure that people in those states know that there's flood risk, but they're not going to get that information because the quality of their disclosure laws are poor. And then we can take that information, take that study, and really try to push for change. And so the other 25 states, they either have a C or better grade. There, people do get the information that they need. And we were really focusing on making sure that people who don't get the information they need get it through that report and can use it to push for change in their own states.
That makes a lot more sense. So even though Arizona, we have a low flood risk to some of the threats that Florida has, it's not very transparent here, and there's just not a lot of information sharing. That's why it qualified to be looked at in the first place.
Yep, absolutely. That's spot on.
All right, Arizona, get with the program. We heard from a couple states in this episode. Can you share any additional progress that's been made on strengthening flood disclosure laws at the state level?
Absolutely. Some states have really taken a change in the past year to improving flood disclosure. So states like Maine and Vermont went from having Fs to having a C grade in 2024 because they really took a effort and took the initiative to improve their disclosure laws through legislation. Another state that's starting to change is Georgia. So in 2025, Georgia introduced legislation to improve flood risk disclosure in the state. Representative Campbell introduced the bill in the Georgia House that would provide multiple factors of information on flood risk to a potential home buyer, such as has the house ever flooded in the past? Has the house flooded in a manner that required federal assistance to be rebuilt, which would require flood insurance? Flood insurance required on the property? Is the property in a flood zone? And that bill just passed the House of Representatives in Georgia last week, which would be a week of March 7th. And that was really key to making sure that this moves forward. And so that bill now is in the Georgia Senate and will hopefully pass out of the Georgia Senate and become law by the end of the session. I think there's a lot of appetite for flood disclosure in the state because right now Georgia receives an F grade from NRDC. And by changing the disclosure law according to this bill, if this bill becomes law, Georgia would go from an F to an A. And homebuyers would have a right to know whether or not the property they're about to buy has ever flooded in the past. And what's interesting about Georgia is that they actually already have flood disclosure for renters. Georgia was one of the first states in the country to provide renters a right to know whether a property has ever flooded, but they don't have that same right for buyers. And so this would really level the playing field if this bill becomes law.
I was interviewing Jackie Jones just as you were in Georgia when this was all unfolding. So that was exciting. And she even offered to, I think, drive up to the Capitol if you needed some people from the public. So I'm glad it's moving that way. All right. What can homeowners, renters, and advocates do to support stronger disclosure laws? You as an organization are out there doing this incredibly important work, but at the individual level, you need advice for them?
Yeah, there's a couple of things that they can do. One is to contact their state legislators. Reach out to their state representative or their state senator and say, I live in one of these states that has a bad grade from NRDC on flood disclosure, and I want that to change. I don't want to be in a situation where I'm buying a home, I'm making one of the biggest investments of my life, only to find out later that it's flooded and that was never disclosed to me because it was never required. And so I think really pressuring state legislators to make that change is crucial. Some other things that homebuyers can do if they're in a state that doesn't require flood disclosure is ask a lot of questions during the home buying process. Because one thing that sellers can't do is they can't lie to you. If they're not required to disclose and you ask them straight up, has this house ever flooded? A seller can't say no if it has flooded in the past, even if they are in a state that has bad disclosure, because that technically would be fraud. And so one of the best things you can do as a home buyer is just to ask a lot of questions to make sure that you're getting the property that you think you're getting and that it's safe for your family.
A common theme in these interviews that I did is that they all said that NRDC was a fantastic partner. For you guys, partnerships are a key part of how you do all this, right?
Absolutely. Yeah. Having partners is key to success, especially local partners who are the ones that are on the ground, working with the population that is experiencing flooding, working with the population that isn't getting the information they need. Partners are really key. Partners like the Waterfront Alliance were absolutely crucial to passing flood disclosure in the state of New York. Same with the Southern Environmental Law Center. I don't think we would be able to be as successful if we didn't have them on board, really pushing for the change at the state level.
All right, Joel, thanks to NRDC for partnering with America Adapts, and thanks for coming on the podcast.
No problem, Doug. Thanks for having me.
Okay, adapters, that is a wrap. Special thanks to Joel Scata and all our guests for shedding light on why flood risk disclosure laws are such a powerful but underappreciated tool for climate adaptation. It might not be the flashiest solution, but when you think about it, buying a home is one of the biggest financial decisions most people ever make. Having clear, transparent flood risk information can mean the difference between financial security and disaster. It's a practical, common sense way to help people and communities adapt to climate change. I also want to extend a special thanks to Jackie Jones, who shared her firsthand experience of dealing with flooding in her home. It's one thing to talk about policy and data, but it's another to hear directly from people on the ground, homeowners like Jackie, who have to live with the consequences of inadequate disclosure. Stories like hers remind us why these issues matter and why we need stronger policies in place. And of course, a big thank you to the Natural Resources Defense Council for partnering with me on this episode. Their work advocating for stronger flood disclosure laws is proof that smart policy can make a real difference, especially as states take the lead while federal efforts scale back. This conversation also highlights a bigger point. We need to think about adaptation within the framework of modern society. It's not just about big infrastructure projects or coastal defenses. It's about integrating climate resilience into the everyday systems we already rely on, like home buying, insurance, zoning laws, and beyond. As climate change accelerates, adaptation needs to be embedded into the decisions we're making today about where and how we live. Definitely check out the show notes for this episode to get some access to the resources that were discussed in the episode. If you want to learn more about how you can highlight your organization's adaptation work, visit my website, americadapts.org, or email me at americadapts@gmail.com. Okay, adapters, keep up the great work. I'll see you next time.